We are pleased once again to be the sponsor for the annual dinner for the Chamber of Commerce. I know we were here about 3 or 4 years ago, but you forget how beautiful this place is. So nice to be back. Thank you for having us. There are 2 things I wanted to run by that the bank has done this last year that are, I think, pretty extraordinary. One, when COVID hit, and remember when everything shut down? You'd look at Main Street and there was no cars, nobody out, and you wondered what was going to happen. And I think we all had a little bit of trepidation. We did, as a bank, 459 PPP loans for a little over $20 million. I know for some people that was a lifeline to keep them in business. For others, it was just didn't turn out to be a lifeline because they did fine. But in April, we didn't know. The other thing is when that occurred, mortgage rates dropped to levels that none of us have seen in our lifetimes. And so the volume of mortgage loans just exploded. And we did, from May of last year through May of this year, 239 real estate loans in Ashe County, almost all of those home mortgage loans, for about $42.6 million. That's 47.4% more than the next highest lender did. So being able to help businesses stay open, being able to help people to get better rates and lower payments on their mortgages, that's really, kind of why we exist as a hometown bank. So thank you if you were one of those folks. And now, let me go ahead and introduce our speaker. I've been told to stay on script because he told me it was not too late for him to go back and change grades. Dr. Davis graduated from the University of North Carolina at Chapel Hill with a degree in economics, and then he got a master's in economics from Vanderbilt. Went to the University of Georgia and got a PhD in finance. Came to Appalachian State in 1976 as a professor of finance, and then was the chair of the department from 1981 to 1998. In 1981, he became the chief economist for the North Carolina Bankers Association, and today he is also the dean of the North Carolina School of Banking, as well as an instructor. He has been instructors for the Directors College by the North Carolina Commissioner of Banks, the FDIC, the North Carolina Insurance Executive Management School, and the South Carolina School of Banking. A few years ago, the North Carolina Bankers Association and ASU got together to establish a endowed professorship in his honor. So the Harry M. Davis Professorship in the Walker College of Business now exists. Harry is active in his church, currently serves on the board of directors of Western Youth Network, the Boone Area Chamber of Commerce, as well as Lifestore Bank and Lifestore Financial Group. Please join me in welcoming Dr. Harry Davis.
Thank you very much, Bob. Appreciate that. Kitty, thank you very much for the invitation, and the Ashe County Chamber of Commerce for inviting me to be a part of your annual meeting. At these meetings, you recognize businesses or people that have been very important to you over the last some period of time. And so I want to thank you for letting me be a part of this. I've known Bob for a very long time, and Bob, he's a good speaker. He can stand in front of a group and introduce speakers or give a report at the bank or whatever. But this was not always the case. In fact, Bob used to not be a very good speaker at all. And when he knew this when he was an undergraduate student, and he decided to take a speech class. And so he's in class, and it's time for him to give his first speech. And he goes up, and they've got a podium at the front, and he starts this speech. Well, there's a student sitting right in front of him on the front row, and after Bob had only spoken for a few minutes, his eyelids start to come down. Well, Bob keeps speaking. Before long, his eyelids are all the way down. This guy's eyes are closed. Well, Bob drones on, and before long, this student's head starts coming down like this. Bob drones on, and before long, his chin is rested on his chest. Did I mention that Bob droned on? So Bob droned on, and before long, this student started snoring. Now, this student's on the front row. Well, there's a student in the back row, And he's a very serious student. He makes all A's. Very serious student, studies all the time, and he cannot believe that this student is being so rude. He reaches over to his backpack, picks up a textbook, and throws it at this student as hard as he can and hits him in the back of the head. The student's head comes up, he shakes it like this, and he says, "Hit me again, I can still hear him." He's gotten a lot better than that. Well, I'm going to talk about the economy. It's really quite good in a lot of ways. Before the pandemic, the United States was in the 11th year of an economic expansion. 11 years. That was the longest in history. And then we slammed into the wall of the pandemic. The recession was different than any that I've ever experienced or any of you. It was not a goods recession. It was not a collapse of housing or automobiles or the manufacturing sector. It was a collapse of the service sector, tourism, hospitality, even medical procedures that weren't needed. So that kind of thing fell off a cliff. Other parts of the economy, the manufacturing sector did just fine. In fact, try to go buy a washing machine or a dryer right now and see how long you'll have to wait to get a specific type that you want. Typically in a recession, banks don't do very well. They do very poorly. Not this time. Banks have done very well in this recession. There's an index called the ISM index, and it's an index of manufacturing activity. And it crashed in March and April of last year, then increased slowly. If it's above 50, that means the manufacturing sector in the United States is expanding. It's at 60 right now, which is incredibly high. The economy, the manufacturing part of the economy, is doing extremely well. Consumer confidence, of course, crashed in March and April and May, but has since come back, and the latest number came out yesterday, and consumer confidence is back above the beginning level prior to the pandemic, and is quite frankly historically high. The consumer confidence is quite high right now. Income, one of the problems has been income, personal income. If you were a white-collar worker and you kept your job, you just kept going right on. But a lot of people who did not have that kind of a job, a lot of low-income people lost their jobs, and for them, it's really been very difficult. So income growth in the United States, which has been uneven for a very long time. It didn't start in the last 10 years. It started 40 years ago. But the pandemic did accelerate the difference in the income earned by high-income people and low-income people. Now, during the pandemic, if you were in the retail business, it was feast or famine. If you had a bike shop, you can't get bikes. A woman in my neighborhood was out walking her dog. She owns a bike shop in Boone about a month ago, and I said, "How's business?" She said, "Well, we usually have 120 to 150 bikes in inventory. We have 20. I saw her a week ago. Again, she was walking her dog. I said, "How many bikes you got?" She said, 12. So they can't even get bikes, and as soon as they get them, they're sold. Golf courses. Boone Golf Course had one of the best years it's ever had last year because it was one of the few things we could do. We could get out and be outside, outdoors. Lowe's and Home Depot, they've been tonning it. People, you're sitting at home and you're going, "Why don't we get another refrigerator? This one's really old. What about that bathroom and those countertops?" So Home Depot and Lowe's have been doing extremely well. Sales are way up. In fact, you probably heard that last year, between the beginning of the pandemic and the end of the year, lumber prices increased about 250%. They've since started coming down, by the way. But that added to the cost of building a new house in the United States, the average house, that added $35,000 to the cost of building the average house in the United States. The stock market, wow. The stock market hits a new high every week. I mean, it's unbelievable. The FANG stocks, Amazon, Google, Microsoft, those types of stocks have done extremely well. If you bought Tesla, Last March, it went up 900% before the end of last year. The S&P 500 through today is up 14.4%. This year, we've only gone a half a year through today, so we've got another half a year to go. Wealth in the United States is at the highest level in recorded history, adjusted for inflation. Never has wealth been so high. And you know why. Where is your wealth? It's in your 401k and where else? In your house. So if you own a house, it's gone up in value tremendously in the last 12 months. The stock market is way up in the last 20, 30 years, pick a time period. And so I just saw this number 2 or 3 days ago. The Federal Reserve tracks wealth of Americans quarterly. Last year, wealth in the United States increased $13.5 trillion. Now, they've been tracking this for over 30 years. That was the largest one-year increase in wealth in the history of the United States. So we're in a recession, but people who have a house in the 401k are doing great and did great last year. Home starts again crashed with the pandemic, then started up. Home starts are back above the pre-pandemic level to about 1.65 million. We used to build 2 million houses a year in the United States. We hadn't done that in a long time. But now if we can build 1.6, 1.7 million, that's pretty good. But we're not building enough, and everybody in the room knows that probably. The inventory of unsold homes is about 2 to 3 months. A healthy level would be 6 months. So it's very hard to find a house to purchase. Where I live in Boone, the house beside me went up for sale about 2 months ago and sold in 11 hours. So very difficult to find a house. How have home sales been doing? Home sales, both new home sales and existing home sales, last year were at the highest level in 14 years. So and they're being actually held back because you can't find anything to buy. So it's an amazing market. Home prices, they just released those numbers in the last week, 13.5%. That's the average over the last 12 months, ending in the latest month. But depending on where you live, the price of your house could have gone up 10% to up to 18%, depending on, again, what part of the country you live in. If you look at Ashe County, last year you sold more homes than any year you sold, and the dollar value of those homes was the highest ever. So real estate sales, it's true all across the country, and it's true right here in Ashe County. Mortgage rates continue to be at historic low levels, and I'm not sure when they're ever going to go up, but they are still at very low levels. One thing that may help Ashe County and this part of the state, we do have a trickle of people moving from urban areas, downtown Charlotte or Raleigh or Atlanta, to urban areas to get out. They can work from home, and so you'll have people moving into Ashe County because they can. They can work from home, and they can set up an office in their house, and that is a trickle of people. It's not a tsunami, but it is a trickle of people choosing to do that. Let me talk about employment for a minute. Before the pandemic, the unemployment rate in the United States was 3.5%, lowest rate in 50 years. It went up to 15, and in May, the latest month for data, it was 5.8%. So it's come from 15 down to 5.8. We lost about 22 million jobs in the pandemic. We lost 11 million jobs in the Great Recession back in 8 and 9, and we lost them over about a year and a half, 2 years. In this one, we lost 22 million jobs in 6 weeks. Again, we slammed into a wall. We've gained back about 15 million of those, so we're still down about 7.5 million. Before the pandemic, there were 6.7 million jobs in the country unfilled. In other words, you couldn't find anybody. Now there's 9 million unfilled jobs. Actually, it's a little more than 9 million jobs in the United States. We can't find anybody to come back and fill these jobs that are empty. There are far more unfilled jobs than there are unemployed people. So if they want a job, they are there. North Carolina unemployment, our rate went up to about 13.5%, and in May, our number fell under 5%. North Carolina's unemployment rate is 4.8. We have remained under the state unemployment rate throughout the pandemic. That's a great thing for North Carolina. If you look at Ashe County, your unemployment rate got up to 10.7% at the height of the pandemic and is now 3.5%. That's an April number. The county numbers come out much slower, so that's an April number of 3.5%. There are only 4 counties in the state of North Carolina that have a lower unemployment rate than Ashe County. One of them is Watauga, and it's just a little bit lower, but that's great that you've got 2 counties here in the northwest corner of North Carolina that both have very low unemployment rates. The problem with the rural part of the state, whether it's this county or any of the other contiguous counties, is income levels tend to be lower here than they would be in Charlotte or Raleigh or Atlanta. And that's because they have far more professional type jobs than we do in this part of the state. So it's great to have the low unemployment rate. And of course, the thing that we hope occurs over time is that we end up with better, higher paying jobs. And so that would be everyone's target, and that's what everyone would like to see. Now, I don't want your eyes to glaze over, but let me talk to you for a minute about MMT, Modern Monetary Theory. Have you heard of this? If the economy's not doing well, the federal government is supposed to stimulate the economy by spending money. Okay, spend lots of money, throw lots of money. I call it helicopter money. We fill up helicopters and we fly over the United States and we just throw it out the door. Everybody grabs a handful, and that's what we've been doing. 5.7 trillion so far and counting. So the federal government runs big deficits. That's their job. This is from modern monetary theory. The Fed, the Federal Reserve, is supposed to go in and buy up large parts of the debt, provide liquidity for the system, and keep interest rates down to stimulate housing and automobile sales. That's the job. Have we been doing this? Well, what's the limiting factor? Can you do this forever? No, you can't do this forever, because what happens is you end up with inflation at some point, and if you get lots of inflation, the whole thing comes unraveled. And at that point, the federal government and the Fed are supposed to slow down. The Fed is supposed to take their foot off the gas, put it maybe on the brake, tap the brake a little bit, allow interest rates to go up, and this will slow the economy down and slow down the growth and the rate of inflation. At least that's the theory. So, have the Fed and the government been practicing MMT? From March of last year to the end of last year, the Federal Reserve more than doubled the size of its balance sheet to over $7.7 trillion. More than double it. It today stands at $8 trillion. Well, the U.S. economy is only 22 trillion. So the Fed's balance sheet, $8 trillion. So they've clearly been doing their job. What about the fiscal side of things? That is the federal government. What'd they do? Last fiscal year, we ran a $3.1 trillion deficit, the U.S. government. Expressed as a percentage of GDP, expressed as a percentage of our economy, it's the highest level since 1946, the year after the end of World War II. So it's incredibly high. Has the consumer price index, has the rate of inflation started going up? In the last 2 months. It is starting to go up. Now, the Fed says it's transitory and that it'll back down and the rate of inflation is not going to get out of hand. That's the big rub right now. People are trying to figure out, is it going to go up, stay up, or is it going to back down? I have seen reports out of China that Chinese products are going up in price very rapidly. The stuff we import from China is going up very rapidly, and it's a recent thing. It's like in the last 6 weeks to 8 weeks. So it's something that we need to keep our eyes on. Just a touch on Biden and the president. We're going to increase the minimum wage. The minimum wage is going up as fast as it can go without Congress doing anything. Less than 2% of the American people work at the minimum wage. Less than 2%. Hardly anybody. And of course, most minimum wage work, most entry work is now paying $8, $10, $12, $14 an hour. So if they want to raise the minimum wage, they need to hurry because it's going up very rapidly in the marketplace. We're probably going to get some tax reform. We're probably going to raise corporate tax rates from 21 perhaps to 25%, not 28, but some increase. We may increase capital gains tax on people who make over $1 million a year. At least that's the plan. Whether this works or not, I do not know. Infrastructure, the latest bill is at least $600 billion. It may be $1 trillion. And the Family Cares Act is somewhere around $2 trillion. All of these bills have not been passed yet, but they're all on the table to be looked at. So we're still spending an awful lot of money, and that's in the plan. Now let me end by saying a few things about the economy and where I think it's going to go. Last year, the U.S. economy shrank 3.5%. 3.5% smaller at the end of the year than it was at the beginning of the year. This year, we're probably going to grow about 7%. You got to go back to the early 80s and President Ronald Reagan to find growth rates at that level a long time ago. The unemployment rate is already down to 5.8. It's bound to go under 5% or right at 5% for the United States by the end of this year. North Carolina's rate's already under 5%, and it's going to go to 4% by the end of the year. That would be great. We will continue to have an unemployment rate under the national rate. Ashe County's rate can't go much lower. It's already so low, but it probably will ease down to around 3%. It would be hard to get much lower than 3%. Retail sales, I started telling audiences 2 and 3 months ago, if you want to buy things, you better start buying them right now because everything's going to be sold. And it's very difficult right now to buy certain kinds of appliances and that sort of thing. Tourism and restaurants and hospitality, try to find a hotel room at the beach. Try to rent a house at the coast right now. You can't find one. Everybody has decided all at the same time, let's get in the car and go somewhere. So that's a phenomenon. In fact, I joked with audiences 2 months ago. I told them, if you want to go out to eat this summer, just go ahead and call a restaurant and get a reservation because you're going to need it 2 months in advance to be able to go to certain restaurants to eat out. Home sales are going to continue to do very well this year. They will not increase like they did last year, but they will increase just slightly. There just aren't enough homes out there for people to buy. Mortgage rates will remain low, and that will continue to stimulate the housing sector. And again, that is extremely good for a county like Ashe County. That's great that you have a very strong real estate sector to generate tax revenue and other things. So let me end by saying, you know, when an economist is positive, how often has that happened in your lifetime? The economy's doing great. The economy is going to continue to do, this year, the economy is going to grow 7%. That's wonderful. Next year, it's going to continue to grow above the post-World War II average rate of about 3.5%. It's probably going to grow 4.5%. We're going to have at least another 18 months of very strong, solid economic growth in the United States, in North Carolina, and again in Ashe County. So thank you very much for letting me be a part of this. Everybody drive home safe.